Okay. My idea is that we have entrepreneurs basically rule the government because they know, they roll up their sleeve, they know how to get things done. They never sleep. It's not going to take them 25 people to delete a paragraph. So we're really excited. We've got 2 sessions left, and these last 2 are really great sessions. I mean, this next panel, look, we could talk all we want about the Jobs Act, about Reg A Plus, about new ways for issuers to access capital. But the truth is, if we don't have the infrastructure that allows for secondary transactions to create liquidity, to build vibrant venture exchanges and secondary markets, and to clear these certificates, there's no point in having, no point in even having the legislation. So this next panel is really important. We're really going to focus and hone in on some of the latest trends that we're seeing in both liquidity and clearing. And I'm honored to bring up our panel. I'm going to introduce our moderator, Bob Akeson, who actually is he knows a lot about clearing, as he formerly ran clearing for Neuberger Berman. And we've got a great panel here. We're going to talk a lot about some of the blockchain, which is I know pretty interesting and groundbreaking. A lot of people are talking about. We've got NASDAQ private market, Cromwell Coulson from OTC, and we got Kara Kennedy from Clear Trust. And we've got Steve Lord. It's going to be a great panel. So with that, let's bring you guys on.
So as we get set up with mics here, I'd like to welcome everyone to the panel discussion on liquidity and clearing. Again, my name is Robert Akeson. I am with the Industrial and Commercial Bank of China Financial Services, now a FINRA registered broker-dealer. I am delighted to be here today. So the ability to convert an asset to cash and vice versa is absolutely essential to the smooth operation of any market. During the last 15 years or so, there's been a series of regulatory and market changes which have altered how the capital markets work. And I think we've heard a great deal about that today and about some of the solutions for this issue. I think everyone in this room would agree that small companies are very important engines for both economic as well as job growth in this country. So any impairment to that process, to the process of small companies being able to form capital, affects the entire country. It doesn't just affect Wall Street, doesn't just affect the issuers, but it affects Main Street as well. So it's a very important issue. And I think we would all probably subscribe to this, or many of us would, that the Jobs Act has done a terrific job thus far in helping to restore and strengthen the capital formation process in this country. As I think we'll hear in a moment, it has done or is in the process of doing a very good job at facilitating the evolution of some private companies to a public venue, which is obviously very important, but still more needs to be done. So the panel today on liquidity and clearing is going to focus on top issues related to these topics. Okay, so we'll talk about the Jobs Act, Regulation A+, which I think we've heard about before today. As Dara mentioned, the possibility of applying blockchain technology. And I'd like to see a show of hands here. How many people actually know what blockchain? I'm impressed because until we set this panel up, and Steve Lord brought this to my attention, I had no idea what it was. I guess I'm not embarrassed to say it because I'm saying it. It is a potential game changer, so we're going to learn more about that. We're also going to talk a little bit about how transfer agents are taking a much more important role in helping companies and investors going forward. And last but certainly not least, we're going to talk about the clearance and settlement system that assures safety and timeliness of transfer of ownership. So these are all very important things. Just one house note before we continue. For those observant among you, you will note that unfortunately Anne-Marie Tierney could not be here. She is ill. In her place is her colleague Rob Mallon. So before we proceed with questions, why don't I ask the panel to introduce themselves very briefly? And why don't we begin with you, Rob? Put you on the spot.
This is right on the sphere.
Right.
Thanks for coming.
Good afternoon. So I'm not Anne-Marie Tierney. My name is Rob Malin. I've been at the NASDAQ private market since its inception in 2013. I lead the sales effort for that initiative on the East Coast. And prior to joining NASDAQ private market, I'm what I would refer to as a repeat offender at NASDAQ. Had previous roles at NASDAQ and then took a 5.5-year hiatus when I joined the corporate strategy group and launched the equity capital markets effort at LiquidNet. Prior to that was a corporate bond salesman, trader, and debt capital markets person, so have been around Wall Street for the full duration of my 20-plus year career.
Me?
Yes, sir.
Hi, my name is Steve Lord. As he just mentioned, I'm here under two different hats. I edit the hedge fund website FinAlternatives, and I'm also the owner of a consulting company that focuses on digital currency and blockchain technology called Modern Money Group. Oh, feedback. Lower? Higher? Better? Okay. And for those of you that do know what blockchain is, you know that it is going to revolutionize a tremendous portion of the way Wall Street actually works and how it transfers things from one person to the other. And those of you who know FinAlternatives know that that's one of the largest hedge fund websites out there where people can get information about what's going on in the hedge fund and private equity space. So I'm sort of here to be one of those two things given the course of the discussion that we have.
Problem?
So I'm CEO of OTC Markets Group, and we operate electronic markets for public companies. We've got an OTCQX marketplace, which is our best market. It's for companies that can meet high financial standards, meet compliance processes. It's built around giving companies the public market, the value of a public market, without all the pain of a national stock exchange listing. And then we've got our OTCQB market, which is America's venture market. And it's a world-leading venture market. It has over 1,000 securities on it. And what it does is, if you compare it in size, the median size of a company is about $12 million market cap, which compares to the AIM is around 20 million, and the TSX Venture is about 2 million. And we're building venture markets are that entry market to give small companies the public market they need today so they can grow for tomorrow. And it's something we've created in the last year, some changes, and and we think it's a huge game changer for small companies. And both of our markets are very well aligned for Jobs Act companies to come public. And actually, we have, Bitcoin we learned a lot about because we had, where Anne-Marie used to work with Second Markets, they launched the first Bitcoin fund using Reg D with general solicitation. And that Bitcoin fund, when a year went by and they wanted to create a liquid public market, they brought it to our OTCQX market. And it is the first publicly traded Bitcoin fund, and it's traded on our OTCQX market. So we've got the market for entrepreneurs, for dynamic companies, where investors can find it here first. And we're the global leader in exchange graduates. We had 83 companies graduate from our markets last year. That compares to the TSX Venture at 22 and the AIM at 5.
Is that it?
Yep.
Kara?
So hello everyone, I'm Kara Kennedy. I'm Executive Director and co-founder of Clear Trust LLC. As you know, we're a stock transfer agent. We specialize in shareholder record keeping and compliance services for growing companies as well as community banks. So far as how we differentiate from all of the other transfer agents is this. Historically, issuers have always had to choose between what would be considered a large transfer agent or what would be considered a small transfer agent. The large transfer agents have in-house experts on pretty much everything. They're a tremendous resource, and they're really geared towards serving large companies. A small company might go to a large transfer agent for expertise, industry expertise. However, because they're large by their very nature, they're not able to handle the unique needs that pertain to smaller growing companies and some of the customization and hand-holding that would require. Smaller transfer agents are intended to sort of fill that void and meet those needs, but the problem is, because there's no meaningful entry standards at this time to being a transfer agent. There's no real quality control. A lot of times they're less resourced, and so what you end up with is you have great customer service possibly, but you don't have that same industry expertise that you would get from a large agent. So it's either, do you want the expertise or do you want that responsive custom service? You kind of have to choose which you value more. And at ClearTrust, we believe you really shouldn't have to choose. And as an issuer in today's regulatory environment, you really can't. You need the best of both worlds, and that's where we're strategically positioned.
Thank you. And just a brief word about the Industrial and Commercial Bank of China Financial Services and myself. We are in the business of clearing and settling trades in the public market. We provide equity financing services as well as facilitating repurchase transactions and agency execution. It's an institutional operation. We work with hedge funds, broker-dealers, introducing broker-dealers, insurance companies, proprietary traders, family offices. As Dara mentioned, my background, I've been in the clearing and prime brokerage business for most of my career, the asset servicing side in the public market. So that's my perspective of all this, and I have to say today has been quite an eye-opener for me to see what's going on behind the scenes more in the private markets. So without further ado, why don't we launch into the questions. The ecosystem that has supported small cap companies, investment banks, research coverage, market making, for the most part, has been significantly altered over the last several decades. In 1994, for example, there were approximately 160 broker-dealers that were operating as investment banks and also running books for IPOs less than $50 million. 160 firms. As of the end of 2014, that number had shrunk to 30 investment banks working with small cap companies. So my first question is, what impact, if any, does this have on capital formation for small corporations? Cromwell, let me go to you first with this.
So, small companies need the ecosystem. They need the brokers who are raising capital. They need the research coverage. They need the secondary trading. What's happened, I think, as a change is we've seen a decoupling and unbundling where you don't go to one bank for every service. It used to be you'd go public through Hambrecht & Quist, and they did 50% or more of the volume on NASDAQ. They did your research coverage. They did all these points. Today we have a big changeover in the markets. And you're going to use, sometimes you're going to go direct to a hedge fund for your capital raise. Sometimes you're going to go through an investment bank. There's lots of different opportunities. Research coverage. You're seeing research coverage if you do banking through an investment bank. Otherwise, my bet is on the crowdsourcing sites like Seeking Alpha. We have a company on OTCQX called Tix Corp, which is, that Seeking Alpha posted about how they've got the opportunity for their dividend to grow. And it's a small undercovered company, that's where you're going to find those things. So I think some of the things we are stopping, and we need to remove some of the frustrations where we don't have a regulatory environment built for the internet, built for electronic capital raising and electronic trading. Blue sky just needs to either be reformed or go away. That does not work. There is no securities offering. There are a couple securities offering that take place within one state, and there is zero electronic trading that takes place with one state. And we need to fix that. But there's other things we just kind of need to say, okay, not what used to be here and it's not happening anymore, because we're not going to bring back a room full of salesmen selling financial products. But how do we empower the consumers to have better information? And that's what the Jobs Act is. That's about allowing the transparency of general solicitation and advertising. Those are the things I think as we look forward to, is let's take where the consumer wants to go today, and we've got some fantastic things. Retail investors trading through E-Trade have a better experience than institutional investors had 25 years ago from a transactional and informational experience.
But what do venture exchanges fit into this picture, do you think?
So, the venture exchange bill kind of came out of left field a bit, and it's a very prescriptive bill to say, oh, we're going to have this venture exchange piece, and it's going to be a stock exchange. And stock exchanges are a heavy regulated animal. When I go to lunch with former stock exchange officials, they say, you don't want to be a stock exchange, be an ATS. That's where the innovation takes place. So the bill that came out was very prescriptive. It was this kind of system. We're going to have nickel increments. We're not going to have ATSs. We're not going to have NMS. We're going to have, it was very much of a one market structure view of, and I think, you know, what you really want to do is instead of saying, okay, we're going to make this choice, we think, you know, green borough taxis are the solution for transportation of securities needs. Instead, you want to open up so you can have the Ubers, the Lyfts, the Zap cars, all these different models that are empowered by technology. And I think that's where make it inclusive of ATS is one side, but also what are the problems we're trying to rip through? Blue sky, again, margin eligibility, you know, some penny stock restrictions that we see for innovative biotech companies. You know, there's a few, the history of NASDAQ was not a stock exchange until 2006. So NASDAQ in the 90s when Amazon was listing, in the 70s when Intel was listing, you know, these companies were coming through not to a stock exchange, they're coming through an electronic network. And that part of that flexibility, regulators looked at NASDAQ companies and removed restrictions and gave privileges of stock exchange listed companies to some NASDAQ securities, not all of them. And that's a really important thing is, so instead of the venture exchange, let's have this really prescriptive, let's do this, which is basically a regional exchange, which is a failed model, and let's have something where the regulators watch every move of the business model. No, let's open up the light touch. And that's my view is, because everybody has good intentions of we need a venture exchange, but prescriptive, it's got to be as a stock exchange, not an ATS, that's not going to deliver a great product. And I think that's where you've seen it stopped because there's not that many supporters of the prescriptive bill.
Okay. Thank you. Steve, you're, in your capacity as an advisor to professional money managers and as a journalist, what is your view on what's taken place, what's happened to the ecosystem?
Well, I think, you know, to what Cromwell was saying, we've seen this sort of cram down in the whole public market listing process, right? It's gotten, as you mentioned, it's gotten very hard for broker-dealers to survive, to make money. It's hard for them to trade. It's hard for them to offer. It's hard for them to stay alive. The research coverage is now being replaced by sort of freewheel guys on all manner of websites, Seeking Alpha being maybe one of the higher tier, and then there's a whole bunch of stuff that's just completely Wild West. When it comes to the coverage that we see in terms of hedge funds, I think it's also important to realize that, you know, small hedge funds tend to look at smaller stocks. You know, Bridgewater has a hard time going into a company that's got a $30 million market cap. Now, if you've got a $10 million hedge fund or a $50 million hedge fund, those are the people that are actually going to eventually develop the liquidity for both the venture exchanges and I think eventually the folks that are going to generate the secondary market around the shares privately placed, you know, publicly marketed but privately owned, you know, the angel list type of companies that go out and do financings around their initial seed offerings and things like that. Eventually, the hedge funds are going to get involved in that stage and then the immediate stage after that. And even I think on your exchange, you're not finding a lot of gigantic hedge funds trading in there, right?
Well, they're all trading Fannie Mae and Freddie Mac.
Well, that, yeah,
So,
that notwithstanding, but the equity side of things,
But
right?
the data is very clear. If you're a NASDAQ-listed company and you're under $500 million market cap, the majority of your investors are individuals.
Right.
If you're $50 million market cap, 90+% of your investors are individuals. This is an individual market. And individual investors aren't buying small cap stocks through a Merrill Lynch broker.
So I think the theme I'm hearing now is that a one-size-fits-all marketplace really is not appropriate, that we need to consider the needs of each individual class of issuer out there.
Right, and I think
and organize the markets to meet those needs.
And again, more to Cromwell's point, the technology is developing rapidly enough to be able to let us do that. You know, a lot of the regulatory silos that we've all had to exist under for the last 20, 30 years are because the technology did not exist for us to kind of customize that issuer trade clearing execution experience. But we do have that technology now, and you know, it's going to take a while for the regulators to catch up to it. But the eventual result of all this stuff is exactly what you were saying. One size can't fit all.
Thank you. So let me direct this question to Rob. What trends are you seeing regarding secondary liquidity for public and private smaller companies? Is there anything happening on the regulatory front that we should know about? And we'll start with you, maybe hit Cromwell back on this too.
Sure. So Happy to try to answer that. I don't spend nearly the amount of time on the Hill that Anne Marie does, but I want to just loop back before
Yes,
I
go
address that. You know, a lot of the changes that you describe in the passage of the Jobs Act, speaking to some of the regulatory issues, were really the impetus behind the creation of the NASDAQ private market. So what we saw with some of these changes that you described, certainly the change in the average size of an initial public offering from $50 million to something more like $250 million was something where we saw private companies remaining private for much longer periods of time, and in many cases remaining indefinitely private. So from where NASDAQ stood, that was a problem that they needed to solve. They wanted to deliver solutions to companies earlier in their life cycle, regardless of whether they were seeking a public listing or whether they intended to remain private for some long period of time. And what we found was that they faced many challenges that were lacking solutions. And so one of those challenges is secondary liquidity that you just asked about. So secondary liquidity in the private markets today is generally provided via company-controlled liquidity events. And that's exactly what the NASDAQ private market is built to make more efficient, to relieve the administrative burdens that frequently fall on companies and their outside counsel to pursue these types of transactions. So the need for that secondary liquidity is obviously meaningful for those companies that choose to remain private 5, 6, 10, 12 years into their life cycle, where they have employees with options that have vested, they have early angel investors who are seeking to roll those dollars over so that they can invest in those early stage companies again rather than remaining in those later stage private companies. There needs to be some regulatory solutions for the resale of those securities.
Yes.
So that's really where Anne Marie's efforts on the Hill have been focused.
Yes.
And I think that's pertinent to both Reg A and also to the rule 4A1.5, which is just a rule and not really a real rule. But certainly that allows for the resale of those securities to occur in a much more efficient manner.
Now, as I hear Rob speak, I think of opportunities for Kara. And I'm wondering, are you seeing more private companies seek out the services of transfer agents early on in the process?
Absolutely, and we encourage that because of the regulatory environment that we're operating in. Compliance is obviously key. You know, issuers are being hit from a surprising number of angles when it comes to regulatory compliance, because you have, you know, state regs, you have IRS cost basis reporting, you have Patriot Act compliance, you have all these different things that you need to comply with, public or private, and, you know, because of this, there's no way for these small companies to really do all of this effectively on their own. By starting with the transfer agent from the very beginning, your records are always kept in a manner that's SEC compliant. You can really push a lot of that regulatory burden onto us at ClearTrust so that you can focus on growing your business.
But as you noted earlier, the transfer agents aren't currently regulated.
No, the transfer agents are regulated, but the barrier to entry, I mean, to become a transfer agent is surprisingly simple. Yeah, it's a 2-page form to be a transfer agent.
Become a hairdresser in New York City.
Yes.
Than an SEC registered transfer.
It does, which is incredibly
And,
problematic.
you know, which is a real problem, because you have an industry that, for the most part, takes its responsibility very importantly, but you've got a low end there. And, you know, and it's 2 points. The SEC has rulemaking that they're bringing out to fix that process. But the other point is, you know, the process needs to get fixed, because we don't have the greatest information transfer between transfer agents, between clearing brokers, and between DTC. The process can get so much more transparent and connected with technology. And these are all points. It's like a transfer agent is incredibly efficient compared to having your law firm do every securities transfer.
Exactly. And to link with that, I mean, there are solutions that we already have in place to help streamline this. When you start with ClearTrust from the very beginning, we immediately begin indexing and archiving every single transactional document that's ever presented to us. All of those things are archived, indexed, they're at our fingertips. So literally, you can call us up 3 years down the road and say, we're being audited, I need to see, you know, all of the issuances that you processed for me, you know, for the past 2 years that we're, you know, pre-trading, whatever, and we can do that within moments.
So
Very
as
helpful.
Kara and Cromwell pointed out, record keeping is critical to this process.
It is, absolutely.
And on that note, Steve, what can you tell us about emerging technologies in this area?
I mean, just to give everybody a brief little summary of what this means, right? And what blockchain actually means, for those of you that didn't raise your hand. So a blockchain underpins the Bitcoin protocol. So you've heard all sorts of terrible things about Bitcoin. That's what you've heard. It's not all that. I'm not going to get into all that. That's not this panel, but that's another whole story. The blockchain is essentially a massively distributed, cryptographically secure ledger that exists in millions of computers all around the world.
So it's a ledger in the cloud.
It's a ledger, well, I wouldn't even say it's in the cloud. It exists independently on every computer that's either running a Bitcoin node.
Who can change it?
What?
Who can change it?
No one can change it alone. Everyone has to change it at the same time. That's what makes it secure. So, you know, the existing transfer mechanism for securities, really for anything, I mean, that takes us down the road a little bit off the topic of this panel, but the existing protocols that we use to track ownership of anything is going to be extremely simplified, extremely improved in terms of speed, cost, efficiency, all of these things as blockchain technology pervades things like what you guys are doing. Like right now you take your transfer agent and as good as they are, as good as you guys are, you're still a central point, right? So somebody could nefariously hack into a computer at a server at a transfer agent, change everything, right? That's still a point of failure which a blockchain technology can help avoid.
I think that's a bit aggressive based on Mt. Gox.
Well,
it's
but,
definitely
see,
something that's going to need to get fixed.
Well, but see, I don't think so, because the Mt. Gox failure that everybody always cites really had absolutely nothing to do with the blockchain. It didn't. I mean, if somebody robs Wells Fargo, you don't stop using the dollar. You stop using Wells
But if
Fargo.
someone took my certificates from my transfer agent and then put them into an anonymizer and spread them out, and I couldn't tell where they were and who had them, I'd have an issue.
Not really, though, because
those are the and the part which I find is we have the transfer process, and this is a real challenge because there's a bunch of cases of bad share issuance in our space.
Right.
And we can't talk about, because people will use whatever tricks people use to do bad things with. Financial markets have money, people try to steal it. And people try and sell you something which there's not enough disclosure around, scheme to evade registration. But what we need to do is, part of it's going to be, there's going to be blockchain technologies, but there's others stepping up the game for transfer agents is,
Sure.
Our problem is we have issuance where it's not working and we have a broken process. And you see these places where in the securities industry, in our space, companies that are following the rules, going through securities laws, doing everything right, are having a huge regulatory burden to deposit their shares and make them transferable. And on the flip side is, there are people who are breaking every securities law, sneaking their certificates into the system and trying to trick them in any way. And you see those cases, and it scares to death clearing firms, and there's not enough information transfer. So we have two sides that we need to help. And if we just talk about one, we're never going to get towards making a better market.
So on that note, Cromwell, Kara, tell us a little bit about the due diligence process with respect to certificates, to cleaning them up. What steps can investors take to make the process for themselves go more smoothly?
Absolutely. So, I mean, I'm sure everybody here is familiar with FINRA Rule 0905, and it really scared a lot of brokers. There's many retail brokers now that won't even touch microcap securities. And for those who do, there's a very arduous, expensive, long due diligence process that can be tacked with trying to deposit shares. So, there's a lot that an investor can do to be proactive. And it all really comes down to document everything. Why you bought the shares, how you bought the shares, how you paid for the shares. All of these things need to be documented. We actually interviewed several clearing firms and broker-dealers on what their compliance processes were. We consolidated this and put together a step-by-step guide for an investor who's investing for the first time and wants to be proactive and have an easier deposit process at the end. These are the things they need to keep in mind.
And Kara, would you say it's fair to say that many clearing firms don't even want to touch microcaps?
I don't know of any that really
It
want.
depends on the nobody wants to touch like a stock. If your
It's
stock
high
is
risk. It's high risk.
Cromwell, it's manually intensive.
If your
So
stock-
the
if your stock
clearing
is-
firm is put in a position we don't even know the end customer.
Yeah.
And we
Yeah.
wind up getting stuck. In the old
So-
days, Rule 382 enabled us to basically be a value-neutral processor, like a transfer agent, okay?
Yeah.
But now we're, because of AML, because of bad acting in
So
this
by
space.
micro cap, I say $15 million market cap community bank. It's a pain point to deposit the certificates, but it gets there. And it's a confusing, you have to go through the stuff, you're spending too much in legal fees, too much stuff, but it gets there. If you're a stock that is trading at half a penny and is SEC reporting but has very little assets,
Russian oil and
you know,
gas. or
it's
something.
and you know, things are either, whether it's depositing certificates or having someone trying to transfer from one brokerage firm to another, there's a lot of red flags that go up,
Yeah.
and actually, there should. So I kind of go into, there's a spectrum in between where it's not consistent, and that's the part where you have to drive more transparency, you have to drive more trust, we have to kind of remove, you know, with OTCQB market, we go through and we do background checks of all the management on SEC filings, which the SEC doesn't do. We go to the transfer agent and we confirm the shares outstanding because sometimes they lie on those. We're getting transfer agents now to feed us monthly every QB company that they're transfer agents for, shares outstanding, shares held at DTC, shares authorized, because the big piece for us in the transfer side is investors, dilution is a big risk for investors.
Yes.
We need to have more real-time information out there about it. We need to see when it's happening, and that way investors can make good decisions because the markets need to become more transparent about this stuff. And we've got this beast at the center, DTC, who's, you know, well-meaning sometimes and not sometimes, but they don't make any of their data transparent. You don't know how many shares are at DTC.
Yeah.
You don't know if companies don't have the relationship. It's a process that we need to kind of rethink.
And Cromwell, if I can just add to that point on DTCC, even if we were able to fix a lot of the problems, or as we become able to fix the problems we're just describing, there's a whole new set of issues that are emerging as a result of Basel III and the financial crisis. And that is that large banks, the clearinghouses, the brokerage firms, we all have to post more collateral. And you may say, well, what triggers that? Well, various events or facts, such as you're dealing with securities that are extremely low priced, or you're dealing with securities that have tremendous price volatility. That all comes back to the clearing firms in the form of higher collateral deposits. So it causes us to say, is this the kind of business? Are we able to process this
But
business?
these are, you know, and a lot of these are edge cases. We have to go back to remember, Apple, when they went public, couldn't sell shares in Massachusetts on NASDAQ, but they could sell shares somewhere and they were fine. They raised enough capital. Every market which is, you know, for smaller companies or smaller things, it's a little more work to sell something on eBay than it is through Sotheby's. But it's a wider market. It allows more pieces of property to have value. You have to do a little more work around the fringes. People need to do more research. But these are things that the system works mostly, but there's stuff we need to remove, and there's stuff we need to modernize to fit the internet age and the fact that we're driving this through networks and transparency. It's not humans, you know, it's not a human voice business anymore.
I agree, and yes.
No,
sorry.
please.
And so far as transparency and communication, absolutely. And you know, we need to communicate not only you know, between us and OTC markets and DTC and whatever, but also across transfer agents, across broker dealers and clearing firms. If one TA, I can tell you, detects fraud, closes the account, and they come to me, unknowing, that TA is not going to communicate to me that they detected fraud, and they should. I would, you know, and we need to all be willing
Work
to
together.
communicate. Yes.
I just wanted to go back to one thing. I mean, hearing you guys talk about all this stuff, and not to beat a dead horse, but the blockchain does do all of this stuff. It doesn't do it necessarily yet in a securities clearing context, but that's coming. There are firms working right now very, very hard, very, very well-funded firms that are going to look at applying this sort of distributed ledger, secure ledger that no one can change, screw up. You know, we're talking about provenance of certificates, right? Where did this guy show up with his 800 zillion shares? that is the kind of problem that gets solved with this. It's down the road a little bit, but to the point you were making, the application of this sort of technology. So there is in a sense, trustless system that everyone can rely on. You don't need to take the person's word for it. That's where this is all going to go. And DTC will not look the way it does.
You know, I mean, I see in the same way as like, and I say the Mt. Gox just, there's problems that need to get fixed. There's real value of having a public ledger. And, you know, companies are going to want to be more transparent about share issuance. They're going to want to be more transparent about when it went. There's a careful part. You don't want to give your shareholders names and information.
No.
So there's going to have to be a balance there. But as an industry, we have to share information to make it easier for good business to take place and make it harder for bad guys to trade.
And just go back to Steve's point. I can tell you that clearinghouses are looking at, among other things, blockchain as a possible solution.
Sure. And when you read, just one last one, when you read about the blockchain and Bitcoin together, remember that there's all sorts of different ways to tackle a blockchain. There's not just one. There's going to be many different permutations of this original concept of a hugely distributed public ledger. So, you know, don't confuse the two. Blockchains don't really exist without some kind of valuable token in between them, but it's not all just Bitcoin.
And this, like, you know, like the Bitcoin fund, they had a pain with DTC in the beginning to become publicly traded. Now it's fine. The issuance process goes, it's understood. They built the trust factors.
Right.
Anne-Marie could tell you about the hours she spent with DTC and her clearing firm, but once it got figured out, it all works. And now it trades publicly, and it's like, you know, just
to be fair to DTCC, they have a lot of considerations to balance. It's not like they're just going to make a systems change. It's a big, complex organization that I'm sure we'd all like to see move more quickly. But it has a lot on its plate.
But their customer's not the company. So, you know, we
No,
have
it's
to
not.
get forward. It's like their customer's protecting the clearing firm from their risks. And so the standpoint from them is there's these risky subsets. So one side you can go yell at DTC, or you can say, what can we do to reduce risk for DTC? What can we do to reduce risk?
And the whole system.
And, you know, I think that's why Reg A Plus is huge. Because instead of having these companies that have been issued privately coming through the seasoned security window, under Reg D, you've got an SEC reviewed registration statement. You've got blue sky preemption. You know, you're going to walk in the front door through the new issue process, and this is a mini IPO. You can raise up to $50 million. You go through one federal regulator. You don't need to go to all these states, and it is huge. It is a game changer because our markets, it used to be the SEC said, if you want blue sky preemption, you've got to go to these two national securities exchanges and buy their services too, or otherwise you just got to go to every state. And now it's changed. You can go just to the SEC, raise money with blue sky preemption for the capital raise, which is where it matters because secondary trading, it's a nice to have. It's a vitamin for our market, maybe a little bit of a painkiller. But NASDAQ small cap never had blue sky, and it worked fine. It would work better if it had blue sky, but small companies, it matters about the raising, and that piece is, so a lot of this, we can talk about our frustrations, but we can also talk about Reg A is huge. It's going to change the world. There's going to be crowdfunding portals that are doing Reg A offerings. Companies that never even want to have their shares traded are going to have an SEC prospectus to show to investors for the trust factor. That's great.
So why don't we take some time for questions here? Any comments, questions, thoughts?
We spoke too much.
Yep.
Answered all the questions.
It's
Well,
late, it's hot.
thank you all for your time.
Wait, we have one?
Yes,
We have one?
yes, sir.
I'll refer this to Cromwell. What, as OTC Markets, are you guys doing to help the issuers, which ultimately helps the shareholders? You guys seem to be taking a proactive stance on things. Could you tell us a little bit about what you guys do to support?
So, you know, I'd say the biggest game changer we used to just be a broker market. Like, our business was supporting the brokers trading these securities, and we built up an incredible electronic trading platform that's fully integrated into the online investor experience. And, you know, and that became a game changer because investors have this trading experience that's great. What we didn't have was the consistent information from companies. And that was a real problem because our markets were driven by supply demand rather than price efficiency and companies being engaged. So we created two markets. Very simply, a venture market is the market you need now to get to tomorrow. It's going to have riskier companies. It's going to have companies with raggier edges as they figure stuff out. You know, if you're ready for an exchange today and you can pay for it, you're going to be on an exchange. That's not a market to go fill. QX, it's a little different. You've reached this level of operations. You meet state blue sky financial standards. You meet other standards. You're not a penny stock. You're bigger. You're able to be sponsored by your lawyers. You've got a history of operations. And there we're trying to create a market that is a public market that has everything you need but without the pain of a stock exchange, which is very governance heavy for the largest companies. You know, QX, we introduced a special market for community banks. We have over 80 community banks. We put an index around it to attract investors. You know, these banks can put in their lobby, we're publicly traded on OTCQX, this is our symbol. And their community can buy and sell their shares just like they were on NASDAQ. That's a huge change of creating value. So for us we are becoming listing markets. We're the next new network market. What NASDAQ did before, and NASDAQ was hugely successful. They became so successful that their clients became giant companies. We want to be hugely successful, but let them graduate. And be the market where you can grow into an exchange listing, give companies the runway, be able to handle the companies without too much of a regulatory footprint where they're putting, as you talk about biotech companies where suddenly it's costing $250,000 a year to be on an exchange, and they're still going to the same individual investors, smaller hedge funds, family offices that they're going to on our market.
Can I ask a question? What does this have to do with creating liquidity in the aftermarket for these Reg A offerings? I don't get all this transparency and so on. I do a Reg A offering, A plus, whatever it is, and it gets done. The deal's done. There's a registered security now. What happens?
You bring it to our market, and
And what happens to it?
and then
You're going to make a market?
What?
Are you going to trade it?
It will be traded by brokers on our market.
Are you going to list it? You're going to trade it. You're going to stand there and commit your capital like the firms used to, Trosper, Standard, Sherwood, Herzog. They made markets. Bid and
Yeah.
ask.
Citadel, KCG, they all make markets on our system.
Please,
Sorry,
I'm out of my
but-
skin here. I've had to listen
Yep.
to this. Excuse me. You used the term of a nickel.
Yeah.
If you had a nickel, for the last 40 or 50 years, you would have had any over-the-counter market. A nickel. Guys spread stock, they trade a stock for 16 quarters. All these small over-the-counter stocks, they're not bought, they're sold. I'm talking about the real small cap market, which is one of the reasons that a lot of us are here, because the small cap market disappeared around the year 2000, and we all thought that the jobs bill was going to pay it back, but it got stuck on a lot of the stuff that you're talking about. But what made that market in the 60s, 70s, and 80s, and I was there. I came to the street in 60, okay? I lived through it. I know that small cap stocks are not bought. They're sold because nobody ever heard of them. The only guy I took a company public called Mini Mobile. Now Mini Mobile's a big storage thing. They thought it was a merry-go-round. They had no idea what it was. But my brokers, we did the underwriting at $5. My brokers would like the stock, and they would stay there and sponsor it and sell the stock, sell it. Small cap stocks were sold. There's nothing there about, if you got a nickel, this decimalization took the spread out of the marketplace. What's the incentive for a trader, a marketing firm? The Herzogs are gone for a reason, Sherwoods, Trosper Singers, they're gone for a reason. There's no spread. Without no spread, there's no market making. You're not talking about market making up there. You're not doing anything to create a market for these Reg A plus stocks that are coming out, unless you get a brokerage firm who really likes the deal, and they may write it up, and their brokers may go out and start selling it. Believe me, none of your Reg A plus deals are going to come out upon being effective, and they're going to be lined up to buy it. These are not all Uber deals. These are not Google deals. These are deals that have to be sold.
I think you make some good points here.
I agree with you about the need for market makers, the need for broker-dealer liquidity. NASDAQ, when it wasn't a stock exchange, it was a network of brokers.
Right.
And today we're a network of brokers. We have over 100 market makers on our system. Yes, Troster Singer became Spear Leads, was bought by Goldman, but we have.
NASDAQ's a recent technology. What about when it was just the pink sheets? There
Well,
quote NASDAQ. There's no quote machine.
that's what we were. We took an electronic.
Fine.
So we have Citadel, we have KCG.
Excuse me, I'm going to have to make
Yeah.
this suggestion. Why don't we, this is a very important dialogue, why don't we move it to the bar?
Okay.
Okay, so,
But
thank
we
you.
do
Well,
have
thank
an
you for your
electronic
question.
broker network.
Okay, thank you all.
And I'll also just add that I think, that is developing because a reason why a lot of those stocks were sold, not bought back then, they had a store, they were story stocks. Now I think what's happening, I think the whole concept of also with crowd finance is that you're getting customers to basically fund, to basically invest in the companies or products that they use. So you're kind of creating, it's more of the Peter Lynch model and investing what you know. And, I think, we'll see some of that too, but I think you're right. And I think you'll start to see some of these next generation broker dealers, the technologies, they're going to become kind of the market makers of the past, in a way.